financial statements. So if you look at just relaying or tying audit assertions to evidence and audit procedures, for example, let's focus here on this column dealing with the ASB assertions. You'll see that, for example, existence. I'm not going to go through all of these because we've kind of covered them, but existence. Do the assets recorded really exist? And so examples of that would be the physical presence of the asset. So for example, the auditor might inspect inventory, might inspect property, plant, and equipment. They will confirm accounts receivable. They will confirm cash, right? Because they're trying to test the existence of that asset. Occurrence, those are transaction related. So did the recorded sales transactions really occur, right? That's the key question the auditor is asking. So they want to get evidence of the client shipping documents, as I pointed out in an earlier example, right? Because shipping documents would suggest that ownership of that asset has now transferred to the customer once we ship it, FOB, right? And so the auditor would vouch. They would select a sample of shipping documents from the client's books and records and tie those, they would select a sample of sales from the sales journal and trace those back to shipping documents, right? Because what they're concerned about is, did it occur? I've recorded this sale in my sales journal, so now I want to make sure that it's actually a valid sale, that it occurred. So that's why I'm going to start with my sales journal and tie that back to the shipping document. Why wouldn't I do it the other way? Why wouldn't I go from the shipping document to the sales journal to test occurrence? Why would that not be the appropriate procedure? Why do you think? What am I concerned about with occurrence? Well, it's recorded, right? Occurrence knows, occurrence is saying what's recorded actually occurred. Management is saying what I've recorded actually happened. But what's my concern as an auditor? That it actually happened. So I'm concerned about overstatement with respect to sales, right? So why wouldn't I go from the shipping documents back to the sales journal? Why wouldn't that make sense? Why am I not starting with the shipping document to test occurrence? If I'm concerned about overstatement. Shipping to sales.
So what are you saying, it should be sales to shipping?
Right. It should be. It is. That's the right way. Sales to shipping. But why is the other way not right? John.
Someone could maybe tweak the shipping documents and make it look like something that shipped but hasn't.
Right, well that exists anyway, right? That exists going the other way. The reason that you're not going to start with shipping, because if we go with the premise that if it's been shipped, it's an accurate sale, right? That's going to tell me completeness. That's going to tell me, because the shipping documents tells me, right, if I go with that premise, shipping tells me that it should be recorded, right? Shipping says I sold something and it should be in my sales journal. That gets to completeness, right? That tells me that when I start with the shipping document and tie it back to the sales journal, that tells me that everything that I pushed out the door is properly reflected in my sales journal. That gets to understatement. That doesn't tell me anything about overstatement, right? Because I want to know that everything that's recorded over here in the sales journal is valid, right? So the only way to know that is to randomly select from the sales journal and ensure that there's a shipping document to support it, right? We don't want to start with the shipping document to test occurrence. We want to start the other way. We want to know, because we're concerned about overstatement. So we want to know that everything that's recorded here in this sales journal has a corresponding shipping document to support it.
You start with the shipping documents, and the shipping documents
Well, right, but you would want it to, right? But that gets to completeness, right? Because the shipping document is telling me a sale occurred, right? If we go with the premise that a shipping document is a proxy for a valid sale, which is a good proxy, that is just telling us that a sale occurred, right? That happened. So now I want to know, I want to make sure from going from the shipping document that it's reflected. That tells me, that gets to understatement. That's saying, I want to make sure that everything that should be recorded has been recorded. The other way, the overstatement, I'm concerned that they might have put some fake sales in there, some fictitious sales in there. Because technically, if it's a fictitious sale, and assuming that they haven't doctored up a shipping document, right, to support it, assuming that it's a fictitious sale, that means that no shipment occurred, right? That means that no shipment occurred, or no shipment occurred for a valid customer, or a shipment wasn't made to a valid customer, right? So that's why when you are testing occurrence, you're going to start with the sales journal. Does that make sense? Okay. All right, so again, that's just kind of relating the assertions and the evidence and the audit procedures. Let's look at one more. Rights and obligations. So here the key question is, does the entity really own the asset? Are related legal responsibilities identified? So in this case, key examples of audit evidence would be audit evidence from third parties. Third-party audit evidence such as confirmations, such as getting confirmation from attorneys about liabilities that exist, legal liabilities that exist. So, or cash confirmations from the bank about the bank balance. All right. Notice also, I just want to point this out here, when we talk about presentation and disclosure, again, the ASB assertion related to that would be understandability, and basically, are the presentations and disclosures understandable to the users? And so your audit evidence is management prepared financial statements, right? Because it's management's responsibility to prepare the financial statements, and auditors are going to review the financial statements and what the disclosures that how the presentation and the format of the financial statements, as well as the disclosures related to the amounts recorded in the financial statements, and that's inquiry. So some of your audit evidence is obviously going to come through in the form